Hello and welcome to Pro Trader Strategies Market Commentary for Friday, November the 18th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, but we do have several Fed governors speaking today. Earlier this morning, we had Bullard speaking, and a little later in the morning, we had Dudley and George speaking. George came out and said that rates probably are likely to go higher sooner rather than later. So kind of keeping that window open for the December meeting. I've been talking about it. I don't think that that's the right time to do that, but I'm not a Fed governor, so they're probably not going to listen to me, despite the fact that I don't think it's good for the psyche of the consumer to see interest rates rising in one of the most important parts of the year for the retailers. This is the reason why they call it Black Friday, the day after Thanksgiving, is because that's when retailers usually go from being in the red on their balance sheets into the black, which means profitability. So why would they want to crimp spending going into a holiday season? It would be beyond me, but it's neither here nor there. In the past, the Fed has not done it, but with this new crew, with Yellen, they haven't held back from doing that. The last time they raised rates was in a holiday season, and I don't think that that was good for the overall economy to put that into people's heads going into the upcoming season. So anyway, just my soapbox. Not really sure why I don't have on the crude oil up first, but let's go to crude oil off the bat. Anyway, crude oil down on the day, still trending sideways right at the point of control. There's a glut of oil out there. I'm surprised that we aren't seeing more of a pullback in crude oil after seeing the inventory numbers earlier on this week, but that is what it is. Markets aren't always as rational as they are with the supply and demand that's right out there. Anyway, on to gold. Gold came down and tested that 2,000 troy ounce mark this morning. Bounced off of that, but just hovering right above that at $1,207.80, down $9 on the day. But as you can see here on the mark, came down there and tested that area earlier on, just came a dollar shy of it before the bulls came out and defended that. All right, onto the NASDAQ, onto the bonds. These are all messed up. The bonds look like they could be finding a little bit of support right down at 100% retracement for the last year. With the Fed governor speaking, that's putting downward pressure on these, obviously. Down almost a full point. They were down a full point earlier today, but has since come off a little bit. Yesterday had a big down day after the market commentary. We saw the bonds really start to slide. Onto the NASDAQ /NQ. Down on the day, actually leading the charge to the downside in percent terms for that matter, but down 18 points on the day and right back to the point of control. Dow Jones Industrial Average down 32 ticks on the day after reaching, trying to test that all-time high. We did have a all-time high earlier last week, but it looked like we were going to go up there and test that. Kind of fell short of it on the open after we started hearing the Fed governors talk about interest rate rises. That's when we started to see a bit of that pullback. Onto the E-mini S&Ps /ES, also down on the day, but only down 4 points. The overall market, again, was rallying and then decided to take a tank when we started hearing George's comments. This is right there in line with George speaking, Fed Governor George speaking. As you can see, we were rallying, made new highs, and then as soon as he started saying, as soon as that was starting to be discussed by several of these Fed governors for that matter, the overall market just kind of fell out of bed. We are starting to find a bit of a bottom, but as you can see, it was very precipitous on the way down there. On to trades that I've done. Actually, the only thing that I've done was taking off some of my SPY. Now, if you guys remember, earlier on in the month, I did the SPY and I did the November 198 216 strangle. Now I collected about $1.91 for that straddle, or for that strangle, and it went against me. And because it went against me in SPY, I needed to defend that. It actually broke up at above my break even, so I got defensive with it, mechanical. There was not very many days left in it, and if you remember, I rolled those 198 puts up to the 216 puts to create a straddle. Now that's how we get defensive with that. The reason why I did that is because I was able to collect another, I think it was $1.15 or something like that, $1.14 for that roll. So since those puts were only worth, the 198 puts were only worth about 3 cents, and I rolled it up, collected another $1.14 for that roll. That increased my total compensation, if you will, to just over $3 for that strategy. Now, the 216 calls that I originally sold for like 62 cents, those were now worth, when I covered it, for $2.41. So I lost about $1.80 on that part of that strategy, but because I was able to collect well over $2.30, I was slightly profitable on that. So that's why we stay mechanical on that kind of strategy. For that, although the roll that I rolled up, it gave me another credit. Those credits increased my break even on that also. And although it wasn't a big winner, it did turn a pretty big loser into a slight tiny edge. So that's why we stay mechanical on that. If you remember, I also have another strangle on in there. It's got several days to go. It's in the December, so I'm not really getting too aggressive with being defensive on that one. But because this other one was basically going into a couple days, I think I had about 10 days to go when I decided to make that roll up. That was what made that strategy really work out. Plus I got the volatility to contract after that roll. So that worked out really well. And that's why I preach being mechanical on these and teach you the different ways to be defensive with these strategies when they go against you, because it's not always just about, I was wrong and taking those losses. It's about adding mechanics to it, staying mechanical, rolling those up, collecting more credit, and if I had to, I would have rolled that out in time to give myself a little bit more room. But because I was just slightly positive on that, I decided to take that one off and leave on the other strangle that I have on in December. All right, so Friday, today, actually, we're going to be doing a webinar on the iron butterfly, and I've talked about with the iron condor last week and a little bit about the mechanics of that. Now we're going to be doing the iron butterfly this week, and then next week I'm going to be talking about how to defend those strategies when they go against us, and I'll go through all the rules of that. So check out protraderstrategies.com, sign up for the webinar for today, and then that should give you enough knowledge to know what my rules are about that. And then next week we are going to be doing it on how to defend those when things go awry. All right, so go to protraderstrategies.com, sign up for that. If you can't take that, take it easy.